Hey everybody, welcome to the Daily High, your daily dose of Bitcoin and trading insights. This is our third show in the series. We're going to be doing them almost every day. I hope Tone gives me the weekend off, but otherwise we'll do them almost every day. It's been great viewership. We've hit 2,000 on both the first two shows, which I've been blown away with. The comments have been fantastic. The engagements have been fantastic. Today's going to be no different. We've got a lot to talk about. God, Bitcoin did some crazy stuff last night, and it's gone back to a plateau. I haven't seen the charts in the last 5 minutes, but I think it's great. So I'd like to introduce Tone Vase, the hero of the show, and I'm Matt McGregor. Take it away, Tone.
Hey Matt, thanks, man. I got blasted on that trade yesterday when I took a short, and everyone made fun of me. Why do I take a short? And then I missed it by 1 hour, and the whole market cratered. So yes, there was a reason to take that short. We're gonna set up new trades. I'm gonna do my screen share. I'm gonna show you guys how that short is doing today. We're gonna stick with this format for a while, and then I'll be like, hey Matt, why don't we keep these trades on for 24 hours, and then we check at the beginning of the following show. But anyway, we're going to stick to the format. You see it. You should be able to see it on my screen share. Here's that trade that I entered yesterday. I have not fudged with it. And now you can see that the P&L percent is 44%. All I had to do was weather the storm without a stop loss. And after that, it all came down where it belonged. Okay, so we're going to set up new trades. Matt, is your trade up? Because I'm the
No,
one on
I've
screen
got
share.
you do yours first. I've got everything programmed except the price, so I'm ready to
Okay,
rock when you are.
so let's see the price right now. The price right now is, oh man, it's almost at 46. If we wait a few seconds, maybe it'll bounce to like exactly 46. It is at a 45, 943. So let's just say 45, 950. So the price is 45,
40, 49,940.
45, 940. Sure. 45, 940. Let's put our trades in. 1,000, 45, 940. Do you have your leverage set?
I do.
You do. Okay, I don't know what your leverage is, so I just got to decide on my leverage and if I'm going to go long or short. I am going to go short, and I'm only going to do 10% leverage because I'm not crazy confident in that short, but I'm just going to do 10% leverage, and I'm still going short. What's your trade?
Give me the screen share.
All right.
I am so happy about this because, oh, Tone, you have to enable me to screen share, please, my friend.
My bad. Hold on. There you go.
All right, mate. We're going to do this in every episode, so I'm not going to explain the rules again tonight. You should be on board by now. All right, so if I go into float, I'm going to go 46, what is it, 45,
45,
940,
940, 940 or 950. Let me see. 45,
21x
940.
leverage, 21x leverage long.
Long. All right.
I love it. I love it. There's going to be a clear, defined winner tonight. I can't wait. All right, Toad. Well, I've got the screen share now, so I'll take away the charts if you
Go
like,
for it.
mate. So forget about that trade I just made. That's just for fun for this competition. And I can see Tone's getting very
Yeah,
competitive, which
Matt,
I
and it's
love.
really weird. There was a comment to the YouTube channel yesterday, people saying how you go in and out of trades. Guys, Matt won the trading competition by making one trade in 6 hours. And he was competing against a guy that made 19 trades in 6 hours. And Matt barely beat him, but the guy that made 19 trades in 6 hours made money on 18 of them. And when Matt enters a trade, he usually stays in that trade for weeks, if not months. So Matt is not a trader that goes in and out every single day. You're not a day trader, Matt.
Mate, I've been known to stay in trades for decades. I'm very yeah. So this is something else, man. This is just for fun. I'm getting into copy trading on BitGet and on 2bit. I love copy trading, but it's just such a fraction of my portfolio. I'm a bot trader. I'm a long trader. I'm an investor, but this is just for fun. So let's not cross our wires here. But all right. But let's go back to the reality for a second. If I was using real significant money, what would I do right now? I wouldn't do anything right now. I've put this purple line in here at about 47. We're looking at the 4 hour time frame right now. There is no trade for me except for 2 points. One, if until we get above 47, that's I would be guns blazing bullish at that point. But in the position we're in right now, if I was looking to enter a trade on a 4 hour time frame using alphanumerics, I want to get, the rules, back inside the green wave. Okay, this is rolling over in reality in a longer span. If we this little dot right here that you see, that's where my lucid SAR, my bias changes to bearish. Okay, so today's price, and it raises every week, is at about, let's call it 39,000,
Wait, there's a
38,800.
dot there. Can you move them? Oh, okay. Okay, yeah. There's
Yeah,
a. Because what?
yeah.
Your cursor has its own dots. That's why I didn't see it. Okay.
This is not a traditional lucid SAR. I've programmed it differently. But this, for me, it can raise exponentially as well. It can chase the price. I won't go into the details behind that, but for me, this is where my bias would change. Okay, this week, next week, that'll raise higher and higher. It'll follow the price. So for right now, I'm still 100% bullish. I'm 1,000,000% bullish. The green wave is green. I'm still in all of my trades, locked and loaded, every single position you could possibly imagine. But in current price, if I wanted to get in, we are in liminal space. Above the purple line, I'm fully bullish, locked and loaded again. Otherwise, right now, I'm looking for a re-entry. Your MRI support and resistance line, to me, is a fantastic place to set limit orders. But anywhere down inside this wave, all the way down, because I have a defined spot stop loss. I have a defined spot. So the nearer we can draw to this point, if we get down to 40.39, that for me is absolutely golden, because I can go full blown long if I wasn't in a trade with a defined stop loss. Tone, do you have any thoughts on that?
Well, I am completely with you on the upside, right? We're getting back up and closing above 47. So remember in yesterday's show when you said we had that candle. You see that last green candle with the highest close on your chart?
Right
Yep, that
here.
one right there. See, that candle was basically closing when we started the show yesterday. And you were super bullish of a brand new 4 hour high. But for me, a brand new 4 hour high off of a prior high that just took place the day before is not a big deal. But if we continue to consolidate here and then break that 47 again on a close of a 4 hour candle, but not today, let's say exactly where your cursor is right now, like around January 15th, right? Like if we take that long to break 47, I become, now that 4 hour close above 47 is very, very meaningful to me because of how much time it took between the first close at 47 and the final close at 47 before the chart takes off to the upside. On the downside, however, I am a little more cautious. Like I am very, very careful when it comes to catching a falling knife and buying the big dip. I need more than a drop into the middle of an alphanumerics green wave, because that's Matt's indicator. He trusts it with his life. I trust the MRI and a few other things. So for me, there needs to be more. Like I would have to look at my charts to see where in the 40 to 35 drop range would I be willing to catch that falling knife. The MRI will have a lot to do with it, daily or weekly, an MRI buy scenario, along with a beautiful reversal candle, weekly or daily, along with a critical moving average, weekly or daily. And the more of these things coincide together, the more likely I am to try and catch that dip. But normally, I'm not a dip buyer. I'm more of a breakout buyer.
Mate, everything you're saying is I agree with. And that's the funny thing, because I would love if we come down and plateau, or we go lower, and then, as you say, we come back up and break 47. Of course, that's a breakout buy. That's a breakout buy and it's an absolute, the whole structure of the market changes. Much the same as if we came up now and started closing above these and went up straight directly like that. I changed from there. Don't sneezing. But it's very clear to me. I need a defined stop loss. For me, every trade is 50-50, especially when it comes to leverage. I need a place where I am no longer when I can admit I'm wrong and take the hit on the trade. Now, most of those times I'm right because my losses are small and I can let my winners run and run and run. So I have a defined place where I'm no longer bullish. I just keep saying the same thing. So if we come back down in here and we get a green diamond inside here, man, that's for me. My long-term bias is bullish. We've had a good enough pullback. We're near enough to the point where I'm no longer bullish. I can really lever up at that point. That's all I have to say about that. I'm happy to move on to the weekly scale right now. I just put this note
Weekly and
in.
daily, yeah, they're both super interesting. I think the weekly is um
Yeah, the weekly is everything, and
yeah,
your MRI top on the weekly is my biggest reason to be pessimistic on the market. I've been watching it for 9 weeks, and I've been on the same space with you. I wanted to get to 48. It was just a marker in my mind from the Fibonacci's. I wanted to do it on this week. It did it. Tone,
yeah.
you've been spectacular, spectacular. Okay. The only thing that I can't be bearish overall macro on is we just had our highest price in 106 weeks. I'm never going to be bearish at that point.
Right.
That's that's
And
significant.
even more importantly, we're looking at the highest weekly close in the upswing, which is even more bullish to me than a swing high.
Agreed. So for me, we're still all guns blazing bullish, and we're doing is we're above all of my moving averages on a weekly scale, on a
Right.
monthly scale, on a
Right. Well,
monthly.
before you go to monthly,
Please,
right?
please.
Here is the big concern, right? If, and it's a big if the price of Bitcoin on this chart, or maybe you want to, you can leave it like here. You don't really have to zoom in. And if the price, let's say next week, closes below 44, and the price the week after that closes below 42, that's a long way to go on a weekly chart to get to your wave, right? And that's what I mean. If the price on this weekly scale is getting below $42,000, I don't have any critical support until the MRI support line, which is coming in at about just above 34 grand, right? So it makes it very, very hard for me to buy this dip anywhere above $34,000.
And mate, just to be clear, I'm not looking for a re-entry. Don't confuse the 4 hour time frame with the weekly time frame. On the weekly time frame, we only have to come down to here, that 37,800 mark. We get below that, I'm no longer macro bullish. I'm looking for I'll be short. I'm looking for considerable downside, and I have no
Right. Oh,
targets.
that's where your elusive SAR is. It's at
Yeah,
39,000. So
it's just
break,
below this nine here.
and
Yeah,
next week that SAR is going to be above 40 actually. So in 2 days that SAR is moving up.
exactly. Exactly. But we entered the trade back at 27,200 and in the bot 28,300 or something. So it's a profitable trade regardless. It'll close at worst here, which is a good trade. And at best, we don't pierce that lucid SAR. We continue to rally. It just stays in this plateaued area while the lucid SAR continues to rise to get a better price. That's my macro view on the market. It hasn't changed. I'm exactly the same as I was yesterday. I don't care that we've dropped down. Nothing's changed. And if I was looking on the lower time frames, I'd still be looking for a buy the dip situation because I have a defined place where I can admit I was wrong. That's what I'm seeing. Tone, I will end screen share. I think
Oh
that
no,
was
you can go to your
pretty
monthly. No, you
concise.
go to your monthly. You were going to go to monthly and I stopped you.
Right. Okay. Thank you. The monthly. This is I keep they always say when in doubt, zoom out. I mean, that's pretty obvious stuff here. But like on the MRI, we're only on a 4. So like anything that happens within this month, as long as we stay once again above 38,700, I don't care if we come down here. I don't care. That's all by the dip territory. I have a defined spot. This is all great stuff. For like the market looks sensational. We came up and we tested here. I mean, that's bloody brilliant. What more do you want? I would suggest you look for buy the dips in this range because there's a clear spot where we could turn wrong, and then we might come down to here to 30s or something. Who knows? But we'll be short at that point. And then if it goes back up, we'll be long again. We're never going to be wrong. We might get a bit of chop zone like the way that we did earlier this year. But if there's a massive move, we'll be long. And if there's a massive crash, we'll be short. That's the way I've designed it. Tone, please.
Oh,
What do you
I
think?
just realized I forgot to retweet this. I was wondering why we only have 70 live viewers, and the last couple of days we've had over 200. Totally forgot. Oh well. Okay.
Maybe they don't like me.
I'm gonna go. We need a
Somebody
new.
in the,
I need a new background image for the future financial summit.
somebody in the comments didn't like me,
CMOD.
Tone. Somebody
Uh,
didn't like me in the comments. I have to get used to that. That's
how does somebody not like an Aussie?
well, I mean, there's somebody didn't like me. There's somebody thought I was full of
Well,
shit, and
unless. Oh,
it's
never
something I
mind.
have to get
I
used
was,
to,
I
I
was gonna make a
guess.
politics joke, but let me not do that. It's how I lost my audience on my channel.
Yeah, keep it out. All right, you take the reins.
Oh, look at that. My trade's profitable. That's awesome. Well, you want to end the show right now?
Yeah, all right, see you tomorrow. Yeah.
This is gonna alter how long the shows are.
Yeah,
Uh,
I noticed you dragging your legs yesterday towards the end.
all right, let me turn this off. Okay, so this should not be the daily chart. This should be a short-term chart. Let's go. Well, we already discussed the weekly, and you had the MRI up. You just didn't have the same moving averages as me. There was a beautiful cross right here on the weekly chart. I like this golden cross. The moving averages are now all in line. On my weekly chart, this should be 20, 50, and 200. I will double check, but that's what they should be. And they are 20, 50, and 200 on the moving averages. 20, 50, 200. Yep, they are all in line. They're all rising. They're all in proper order, and the price is above them. So that is a very bullish sign. However, the Fibonacci line proved to be formidable. The MRI top, the second consecutive top, proved to be formidable. Look, not every indicator will always do exactly as what you expect. You get an MRI top. That's usually, I mean, there's other thought processes involved. Now, on an MRI top, the first thing I check is what does the candle look like? If the candle is strong, I may still take profit, but not as much. And then I can always put that profit back in, never on the candle after the MRI top, but the candle after that, especially if it's a green star candle, gives me confidence that we're going to go into a second consecutive MRI top. Now, the second consecutive MRI top obviously makes me more bearish than the first because look at this massive run up. Also, it hit a Fibonacci resistance versus breaking a Fibonacci resistance. And the 38% Fibonacci resistance to me is a lot more formidable and a lot more dangerous than the 62% Fibonacci resistance. So breaking this was very bullish. The candle is bullish. It's only the first MRI top. I'm not as bearish for a turnaround on this candle as I am now. This candle is looking like a reversal candle. This MRI, this Fibonacci line did not break. It actually formed as, it actually was resistance. Now I just, in that holding pattern, I definitely took some profit out of GBTC. Granted, I could have sold better the following day, but it wasn't worth the risk. I'm happy with my exit. And I'm going to redeploy that cash on the sideline back into a bullish Bitcoin exposure once another green star candle shows up in a week or two, or I use the daily chart. This is the allocation chart. Allocation chart still bullish. And here is the daily chart. I would love to see a daily chart pull all the way back down to $44,000. There's a beautiful support at 44,000. There is the 20-period moving average. There is the consolidation zone. Yes, I am breaking that consolidation zone by one candle, but it's pretty clear that this is the best horizontal line that touches the most number of candles without breaking any bodies of the candles, though two of the bodies of the candles are breaking it. But I think I'm okay with this minor violation of the tone vase trend line rule. And I would love to see a pullback here. The MRI has flipped over. It would have been even nicer to get to an MRI top on a daily, but that's okay because the weekly has already shown us to be careful. So now let's try not to break that. We go
Tom,
here
can you just
and there.
on this same chart, can you please just pull up the 4 hour time frame? I want to see where that line at 43,300 or whatever it is comes on the 4 hour with alphanumerics, because I reckon that'll be smack in the middle of my wave if
Well,
you
let
put
me
it on.
turn on alphanumerics.
Yeah, on the 4 hour
Well,
time frame.
your
Yeah,
wave is rising,
that's right.
so
That's
so
right.
it depends how long it takes us to get there. If we get there, sometime around January 15th, I can see it being just touching the top of the wave like these wicks
Hmm.
did, this one and
Hmm.
this one.
Which would be magic for me too. If that came in on a daily nine, on a green diamond, 4 hour green diamond on alphanumerics, I would be solid in looking at that for a buy, mate.
And yeah, the 4 hour hit an MRI warning candle, didn't get to a proper MRI top, just an MRI warning. And yeah, there's also a moving average. We're already below one moving average. It's okay if we get below the other. These particular moving averages on a 4 hour chart do not seem to be very useful. They seem to be, crossing and being broken left and right. Though this is a beautiful support. Oh, right here. See, this is gorgeous right here. 3 in a row, maybe even 4 in a row. 4 in a row, come back and bounce off this blue moving average. I'm assuming that's the 200. On the see, this one has multiples, so I'm not actually. I got to double check my indicator parameters. This is short term. That might be the 50. It feels like that's the 50. And look at that. So I like that. We pretty much touched it again. Pretty much touched it again. Right here, we kind of broke it for a little while. And after that, it's been good. So this blue moving average is looking very, very good. And it would be awesome if everything came together at 44,000 right here on January 14th, January 15th, like around midnight, January 14th. Let's see if this is going to be the point. I'm going to
Well, that works on your daily time frame, it works on your 4 hour time frame, and it works on my 4 hour alphanumerics as well,
I'll
because I
put it
think by
here,
that
though.
time, yep.
This is normally my daily chart, so that that's going to be rough. I need to do this on my official 4 hour chart, which is this. This is didn't mean to close that. Oh, I want to talk about that. I talked about it on a different channel yesterday. I was on Joe Saz's YouTube channel yesterday, and I talked.
I thought that was great with Joe as well. I love
Yeah, I
Joe.
talked
That was
about a bunch of stuff I
fantastic.
was supposed to talk about on my channel and this channel. And I said it all on Joe Saz's channel. And that one doesn't have a lot of views yet. And I'm like, ah, shit, I need to talk about that stuff here. That's okay.
We should bring Joe
It,
on. I've been
yeah, we'll
friends with
bring
Joe
Joe on one
for
of these days.
5 years, man. Yeah, he's a great guy. Yeah.
It gives Matt more time to maybe win the trading contest today. And when I talk about that stuff. So, okay, so here's my official 4 hour chart. Let's put that line back in. Again, I have the same exact $47,000 line here, but then I also had that channel. So if I go to the daily chart, and I'm going to put the same exact channel I had on the daily chart, but this is my official 4 hour chart. Let's get that channel in. It's actually a lot cleaner when you draw them from the bottom up, because when you draw them from the top, there we go. It's a very clean line. It only violates the tone vase rule right here for 2 candles. I'm perfectly okay with that. And now if I bring the moving averages back in, there they are. though one seems to be missing. This one, that seems to be off. That's 200. That seems to be very far away. Maybe I think that was the 128. I really like the 128, mate.
Yeah.
And no, that's not the 128. Interesting. So that would have been the 7 and the 30. That's okay. We can use this moving average here. We can turn alpha numerics on. Alpha numerics is super low here. Wait. Oh, because I'm on a daily. That's right. I was supposed to move to the 4-hour. Here we go. Now we're getting somewhere. Now the alpha numerics, I'm going to turn the moving averages off on alpha numerics. This should be investor, correct?
You can just turn all those dots off, scroll down and go, it'll be 1, 2, 3, 4, 5, 1, 2, 3,
These.
4, and then the show arrows, turn that off too. That's the bullish and bearish signals. You don't need that on the 4-hour.
I kind of like those.
I don't like them on the 4-hour. I don't use them. I look for the
Oh, on
wave.
a 4-hour, I should turn them off. Got it.
Yeah.
I kind of like those because it tells me when your moving averages cross over.
That's right. But I only use that on the daily, weekly, 3-day,
Right.
monthly,
Right.
whatever.
And now now I want to match my moving averages. Here they are. So I think that's long term. This is short term. Something is, oh, now it's looking right. Now it's looking right. So here we go. Maybe now this needs to be even 200 and not. What happened to the wave?
You turned the 200 off.
Is that the wave?
Yep. The wave is pegged to the 200 SMA.
So that's 4 for third.
4.
Got it. Okay, cool. Perfect. Okay, so if your wave is at 200, then that moving average there is perfect. And here we are on the daily, and yep, there's the wave. When I turn this on the 4-hour, yep, we're in line. Perfect. That is exactly what we have here. They're just the colors are a little flipped, but that's okay. And here we are on the 4-hour. So this is where I'm going to make that metric. So this green arrow is still a go above 47, close above 47. I'm bullish. And now I'm looking at a pullback down into this perfect support zone at the end of January 14th, I guess, sometime on January 14th.
Well, that's Valentine's Day. You'll be busy that day, I'm sure.
No, it's February, mate.
Oh. I've been lied to.
Yeah, your wife wanted it a little early. Oh man. And here we are. So that moving average is not going to rise very quickly. So I'm looking at something like this. So let's see if we can get that. And now I'm going to put. So this is the point of interest for me and you both.
Yep.
Get into that wave. Get hit off of this moving average. The last time hit the moving average, there was an MRI buy. So everything's looking good for a pullback, and that's why I'm going to short trade. Okay, so let's talk about this. So where are we in relation to the halving? So this is my ultimate halving cycle. So this is all 4 halving cycles. So we can already see that the current halving cycle is could potentially be the longest one. So that means the least amount of hashing power has come on the network in relation to prior halving cycles. So this is the shortest one. So the blue one is from 2012 to 2016, so much hashing power came on the network that we have super early. We have on the equivalent of December 10th this cycle. Now, the longest one was the last cycle. The last cycle is the green cycle from 2016 to 2020. And on this cycle, we have the equivalent of coming up on March 13th. It looks like this halving cycle is we're gonna have after March 13th. And there's a couple of
do you think that you should? Sorry to stop your stream,
go ahead.
But a black swan event, it changes it, right? Like I've seen a lot of analysis where like a black swan event is a rare occurrence, and that has sort of messed with this metric. It looks like we're going to surpass the previous cycle here almost. But had we have not got that black swan, it may be perhaps not. What do you think?
Well, the only black swan that affected mining was the Chinese mining ban. And I don't remember if that was last halving cycle or this halving cycle.
I think you can see it clear as day right there, where we had the 2020 crash, the COVID crash, in that green line right there.
Well, no, the 2020 crash was not did not affect mining much because the miners weren't affected. The price was just affected, right? Like miners didn't turn off their machines. Maybe a few did, but the Chinese mining ban lost 30% of the global hash rate, and it took months for those miners to cross the ocean to land mostly in Texas and like Kazakhstan, which doesn't involve an ocean. So miners migrated over to other countries.
Is that what that dip is there? That's not the COVID crash at all. That's the
No,
China event.
I gotta Google that, right? Like I don't
Mm.
remember Chinese mining ban, the latest one. No, that's when was I think it was in 22. I like whenever the miners, I'm sure someone in our live chat will remember when was the big Chinese mining ban. Bitcoin mining ban. You gotta be more specific here.
Yep.
Bitcoin mining ban. Yeah, in 2021. So it was this cycle, right? So
Yep.
one of the reasons why this cycle is dragging on a little bit longer than the prior cycles is actually because the Chinese mining ban took place. Oh, that's right. It was over here. It was during the big dip between the
Yep.
tops in 2021. Now it all
Yep.
comes back
Yep.
to me. So
The double
over
top.
here,
Yep.
right? So this 6-month period dropped significant hash rate off the network. If it didn't do that, it's possible we would be way closer to the halving than we are right now. Yeah,
Mm.
Winston Alexander says, Drew, hey, Winston, good running into you here. And yeah, so in any case, you can see how every single low, every single, let's say, cycle low took place approximately, what do we got? 883 days. This is daily bars here. That's almost 3 years into the cycle, and now we're rising up. And the reason why I have it with just 3 cycles and not 4 is because this other one like really skews the chart because the
Blows.
price
Yeah.
of Bitcoin was so low.
It's an outlier that it was
Yeah,
skewed the
it's a
charts.
bit
Yeah.
of an outlier because of Bitcoin's low price, but
Right.
this is a lot cleaner. And you can see how everything is in line. We usually get like a nice swing high. The COVID crash was a bit of an anomaly. I'm not really expecting that kind of a black swan event, but I am expecting a nice peak going into the halving. Now, we are looking at a halving sometime in April. I always thought it was going to be in March, but it looks like it's going to be in April. The halving is going to be somewhere over here where my cursor is. And it's going to be hard for Bitcoin to break by percentage what we did last cycle. But I think it's possible for us to get closer. It's at least possible for us to get above the halving low as far as percentage. Man, so this cycle has really been a bit depressed, considering by percentage, we have not gone up more this cycle than at the very bottom of the COVID crash. So I think we will beat the COVID crash, and the COVID crash is at 50,000. So that's the line. I think we will get above 50,000 before the halving. I don't think we'll get to 100,000 like Adam Back thinks we will. But hey, you never know with these Bitcoin ETFs. And that's the other thing I wanted to talk about, the Bitcoin ETFs. So to me, there is already somewhat of a clear winner, and it's only been 24 hours. But hey, we are speculators. And I put an ETF watch list here. Now, GBTC is the original ETF. And to me, the clear winner is volume traded. You can see how GBTC traded 50 million shares. Now, a lot of it was people rotating out of GBTC. So this volume is probably a little bit exaggerated because people are more interested in exiting this to enter all of these other options. So I expect this volume to come down, but I expect the BlackRock ETF, IBIT volume to actually start to rise. IBIT closed at almost 40 million shares traded. and it by far was bigger than any other. Fidelity came in second. This is the Fidelity ETF, and it came in second at about 12 and a half million shares traded. After that, we had ARK Invest, comes in at a little over 5 million shares traded. This is Bitwise, and this ticker looks a lot like the Bitfarms ticker, which confused me yesterday when I was, setting up some trades in these things. And you can see where they all land. This one is Franklin. I'm not very familiar with Franklin, but it did manage to trade over 2 million shares. And Butter, which I love that ticker, that is
Yeah, me too.
Valkyrie, our good friend Leah Wald. That's her ticker, but it only traded about 550 million shares. That is not a lot. Maybe 600, sorry, thousand, not
Thousand.
million. So these ETFs are going to be in a little bit of trouble because it's really hard to get momentum. It's like a horse that is slow to get out the box. It makes it a lot harder for that horse to win the race. So you got to get out. The same thing with a swimmer, right? Like the first one off the block has a nice advantage. So clearly, BlackRock ETF has a nice advantage out the gate. This one has a little bit more volume actually, so I kind of have them sorted by volume. This one is 400, so BTCO should be above Valkyries. And this DeFi one is weird because it's already been trading, not very liquid. So this is some kind of weird trust that's also being converted to an ETF, but it's only at 80,000. Like this is one of those things that's gonna go away because they're not gonna have enough momentum and enough volume traded. And this thing is even better volume than that. And
Do you think they're going to get what kind of pullback do you think from IPO do you think they're going to get? Do you think they're going to get their 40, 50, 60% correction
Oh no,
prior
no,
to
absolutely not, because
no?
these are not like IPOs, and that's because in this case there are no pre-seed investors looking to get out and sold to the masses that have been sitting on this for like 8 years waiting for the company to go public. These people do not exist. Okay, and remember, these things are just straight up backed by Bitcoin itself. So they basically listed at a price that backs Bitcoin. These are going to go up and down by percentage, pretty much the same way spot Bitcoin goes up and down by percentage. It's a little bit of volatility in the first couple of days due to supply and demand, but within a week or two, that's it. They're going to be correlated to Bitcoin. So unless you're expecting Bitcoin to go down 50%, I would this is not going to happen. So they're just
I have a question, Tone. For the past 6 years, every single night about this time, I look at the SPY, the S&P futures, and I see where the pre-market's going to open. And often there's a gap, and then I often can predict what Bitcoin's going to do in the next few hours based off where the SPY is in pre-market looks like. And sometimes there's a massive big drop in when they're correlated, and I wonder, having these Bitcoin ETFs now available, are we going to have a secondary correlated market that we can reference in pre-market to determine the price of Bitcoin, in the next few hours?
No, I don't think so, because again, it's the price of Bitcoin that is going to drive. Like we see right now, these ETFs have not opened for trading yet. There's still an hour and a half to go. But
But
you
there's a
can see
pre-market on them. There's a
there is a
pre-market on the
pre-market on
ETFs.
them, but also you see that the price of Bitcoin is going down. Okay,
Mm.
today so far. This is today's candle of Bitcoin that started trading at 8 p.m. last night, New York time, and 8 a.m. or like, I don't know, like maybe noon for you in Australia. So this candle is going down, and that is why these ETFs are down in the pre-market, because the price of Bitcoin is down. So they will follow what spot Bitcoin is doing.
So just to be clear, you think Bitcoin will lead the
Oh,
spotty ETFs
100%.
in pre-market?
100%. Spot
Okay.
Bitcoin is going to be the leader here. Maybe one day Bitcoin futures market will be the leader, but for now, Bitcoin spot is the leader. And they're still going to drive this pre-market price. Now, the other thing I was going to say is, look at how many, basically there's a lot of shares. This 40 million number is the volume that traded back and forth. But clearly, a lot of people are holding this, including myself. Yesterday, I exited some more GBTC, and I converted the money that I exited because I still wanted Bitcoin bullish exposure. I didn't want to go to zero. So if I go to my allocation chart, the allocation still says 100% bullish. I am 75%. I was 75. I sold 75% of GBTC, which means I had 25% of GBTC. That's no longer the case. I converted the majority of that 25% GBTC into BlackRock ETF, while I still have 75% of cash in my retirement account, and I'm going to deploy that cash into Bitcoin exposure, but not GBTC. Now, the other thing to keep in mind, sorry guys, I had to sneeze, but I muted in time, which was good. So the other thing to keep in mind is that as people are entering their money or buying shares of all of these ETFs, mostly BlackRock, some Fidelity, they have to get that money from somewhere. It's either been money on the sidelines, people converting their GBTC shares into the BlackRock ETF, or the way like I did yesterday, but some people are converting their mining exposure or their MicroStrategy exposure into these ETFs like BlackRock, Fidelity, and ARK Invest. Those are the three most liquid. So that is why when you look at Bitfarms, you see an over-exaggerated drop in Bitfarms and CleanSpark and all of these other. I just put my favorite two here. I have a whole other list for Bitcoin miners and MicroStrategy as well, where my charts don't seem to want to update, but that's a whole different problem. But in general, you see these stocks down a little bit more than they otherwise would be because a lot of people are selling these stocks in order to enter, let's say, the BlackRock ETF, for example. So keep that in mind as well. I think the miners are a little bit oversold because people are getting out of them, not because they're bad investments, but because they would rather have exposure to Bitcoin through a spot ETF to avoid, the mining, maybe the halving. Maybe they think these miners are going to go out of business once they get half their revenue going forward. So it's basically things like that. Now, I personally entered a couple of spread trades on Bitcoin miners. I'm not going to discuss the details. They involve options. They're very complicated. Those of you that are interested in learning more about options. Oh, by the way, my calendar has info on the events I'll be speaking at. So El Salvador Having Party, that will be the first conference I'm attending this year. There's a discount code. I think it's TONE10 that will save you 10%. And I don't have discount codes for others, but I can try to get them. And if you are interested in options, right here, on-demand videos, and you will see the options trading video down here on the right there. Okay, so that's another thing to keep in mind. I saw the price of gold rallied a little bit. That's great. I am still very bullish on the stock market. Look at the NASDAQ about to break to new all-time highs. And S&P is not at all-time highs yet, but I think it's coming. And I saw the price of oil rise nicely this morning. I am bullish on oil. I'm so surprised oil price has been so low this long. And yeah, Matt, any other comments?
No, mate, that's fantastic. I'm happy to wrap it up there. I just want to say, yeah, and if you're interested in alphanumetrics, please use the link in the description. Use the promo code TONE20 for 20% off. I would really appreciate it. All right, let's wind up. Who won the trading competition for today?
All right,
I don't
let's
have
see.
a not incredibly positive. Fuck, you did.
Oh, there it is. I
Oh,
am
damn
in
it.
the green, which means you are in the red because you took the long trade.
All right, here we go. Screen share back to old Matt again, please. Oh, it'll. All right, we're here now. All right.
Uh,
And the winner of today's show, Matt goes down one. Stegosaurus goes up one. Not happy. Not happy. Thanks, guys. I don't know if we'll do a show tomorrow. It's Saturday in Australia, but maybe I can convince my wife and Tony.
no. We'll take a break tomorrow. I haven't done a show on my channel in over 24 hours. I'll probably do something on mine and chat with my viewers.
Excellent. Thanks again, guys. It's been a fantastic week. Thank you so much for your viewership.
Yeah, thank
Thank
you
you,
for
Tony.
watching. Thank you for joining the channel. Check out the little shorts that we're doing. Follow us on Instagram. Follow the Financial Summit. This is where you're going to get Tone's financial commentary, and we'll see what happens to the Tone Base channel. And Matt, thanks again for hosting.